Hello, my name is Jay from QuantumFlow, and today is February 13th, 2024. I'm the moderator of the overnight income service by QuantumFlow, while Tim is the moderator of the Play of the Day service. Today's video will provide a recap of the day with some thoughts from Martin. The market closed on Monday. Let's take a look at the daily chart. Just shy of 501 with price above 2 standard deviations from the past 50 days. And after 6 days of higher highs and higher lows, it's called a micro channel, something had to give. The market found its excuse to take profits this morning from a hotter than expected CPI report. A hotter report means higher interest rates for longer, given the Federal Reserve's 2% inflation target has not been realized. So the market sold off 2%, only to recover strongly in the last 30 minutes, ending the day down 1.35%, as you can see by this doji. Today's only trade was at 10:23 a.m. was a play of the day trade, buying the 494 call, looking for a bounce off of support that was projected yesterday. Tim grabbed a 12% profit and called it a day, given the biggest moves came pre-market and the projected low for today was 496. So he played the bounce off of the projected low, knew it wouldn't go very far, and took the 12% profit for a win on the day. The model didn't look to short any further, given the market exceeded the projected range from yesterday. Dealer positioning going into today had market makers buying 495 puts and selling 492 puts. And as you can see, once the price broke down after CPI, it fell to 490, 72, 491 roughly. This level was also the high from January 29th and near enough to deal positioning to find major support. And that's what created the big bounce that you see here off of this 492 level. Pre-market Tim outlined that 497 needed to be recovered if the market was to go higher today, or at least bounce off of CPI sell-off. And that didn't happen. So as predicted, the market continued to fall to Tim's pre-market target of 492.50 and beyond, closer to the 490 levels, actually, where it went as low as 490.72. Again, these levels were projected by our model and posted in our pre-market channel in our Discord server. Tim suggested the strategy for today was to sell rallies, which is exactly how the day's set up. So anyone who did follow his advice probably had a pretty good day. For tomorrow, dealers are buying 495 calls and selling 497 calls. This is a free product by a firm called TradeHawk. We recommend everyone download it. It doesn't cost anything. And what it'll show you is the dealer exposure, meaning market makers. And you can select the day that you're interested in and the symbol that you're interested in looking at. So if you look at this for tomorrow, for SPY, 214 for SPY, prices recovered post-market. The close was 492.44, but now we're sitting at around 495. What you can see is that for tomorrow, the dealers are buying 495 calls, and they are, which is here, they're buying 495 strike calls, and they're selling right around here 497 calls. It's hard to click on this chart, but they're selling the 497s. So they're buying the 495s, they're selling the 497s. This likely lead to a push higher overnight or in the morning, but the upside is probably limited to the 497 range that our model projected as the high for tomorrow, again, as posted in our Discord overnight income chain. For the downside, tomorrow the dealers are selling the 490 puts, right here, 490s, and they're also selling the 488 puts. So there is some selling going on here, which means that the dealers are pretty confident. Market makers are fairly confident that the market is not going to break these levels tomorrow. And again, this 488 downside sits our model's projected low range for SPY of 488. So you can see from that exposure, which you can look at what VAN means here on this info tab. You can see from looking where the dealers are positioned, broadly positioned, nothing is set in stone, where the market expects to trade for tomorrow. Our model uses significantly more and more sophisticated algorithms to make these determinations, but this happens for tomorrow, ties in quite well with what our model projects. So the market still remains bullish, and we wouldn't stress a 1.35% sell-off or a 2% sell-off or even a 3 or 4% sell-off. So buy the dips is still in favor. And for the morning, while we've given you a projected range for tomorrow, check out the pre-market post on our Discord channel for an update in the morning to give yourself an edge for the day's trading. Thank you.